Looks like people are starting to slow down in terms of coming in, so why don't we get started? Good morning, everyone. Welcome to Freed Maxic's Lease Workshop, presented by LeaseCrunch. My name is Cherico Rosa, and I'm a senior manager in Freed Maxic's healthcare practice. With me today is Joe Smith, a senior manager in Freed Maxic's audit practice. Freed Maxic is over 60 years old and is one of the top 100 largest CPA firms in the United States. Our industry knowledge is deep, and we bring value to our clients with a variety of services like assurance, tax, and consulting. Joe and I co-lead the Freed Maxic Lease Committee and are working to assist organizations with their implementation of the standard. Throughout the event today, you will have the ability to earn CPE credit by checking into this session and completing polling questions. Jen, would you like to take a moment to explain how our participants can access these polling questions?
Yes, thanks, Cherico. Jess, if you could put up the QR code slide, please. So if you'd like to be eligible for CPE credit for attending this training, you can either visit https://freedmaxic.cnf.io or you can scan the QR code that's on the screen. You're going to tap the session labeled lease training and enter your first name, last name, and the email address that you registered with. And you can also access this check-in area right within the Teams meeting. There should be a Conferences.io app that's added in. That's on your top bar that's close to your chat bar and your people button. So you can access it there as well. There's 3 different places you can access it. So please check in. You're going to use site, not the chat, to check in. Once again, you can scan the QR code with your cell phone, or you can visit the site that's listed on the slide to check into the session. We will launch 3 polling questions throughout the training. Please respond to those polling questions in the same area that you checked in. They will pop up once they're launched throughout the training. And then at the end of the training, there's a big green button and you'll hit checkout just to timestamp your attendance. And then shortly after, we will be able to issue those CPE certificates based on your participation in the training today, answering those polling questions and checking in and checking out. And we kindly ask you please to hold your questions till the end of the training and stay on mute. And this training is being recorded, so if you could turn your video off and make sure you're on mute, we'd appreciate it. And I'll hand it over to Joe.
Thank you, Jen. Good morning, everyone. As you may be aware, the new lease standard, ASC 842, became effective for public entities for years beginning after December 15, 2018. For the next 3 years, the adoption requirement dates, luckily, for non-public companies kept getting pushed back as many of the public companies were struggling with implementation on their own end. Unfortunately, the time has come, and now all entities that were not part of the first wave adopters are now required to adopt the lease standard. As I'm sure you're all aware, the standard places all leases, some of which not necessarily considered a lease previously, onto the balance sheet as a right-of-use asset and a corresponding liability. Implementation of this standard has its complications, including bandwidth at the company level, so Freed Maxic sought out a partner who could assist our clients with their implementations as well as their annual compliance requirements. We believe our clients are looking for an affordable option, one that can assist in the generation of monthly journal entries and annual disclosure requirements, and one that is user-friendly. LeaseCrunch does all that. And with that, I'm now happy to turn the workshop over to Jess Vento. Jess Vento is a Senior Director of Accounting and Client Success who joined LeaseCrunch in January 2021 to help CPA firms and their clients adopt the new lease standard and implement lease accounting software. Jess has over 20 years of accounting experience, with 14 of those in property management accounting, where most recently she led a large accounting team in Milwaukee. Jess certainly brings a unique background into leases. In her free time, she loves to watch her husband's band perform and her daughter improve her theater and golf skills. Jess, on to you.
Thanks, Joe. Good morning, good afternoon. I don't know what time zone we're in, so we'll start there. Thanks so much for having me. like Joe said, lots of lease background in my career. So hopefully I can impart a piece of knowledge or a couple pieces of knowledge to you today. A little bit about LeaseCrunch. Like we already mentioned, we are a fast, easy to use lease accounting software, comprehensive and cloud-based. We help organizations implement the new lease accounting standards ASC 842, IFRS 16, GASB 87, and GASB 96. Designed by CPAs, former Big Four auditors, former FASB staff, accounting academics, software development veterans as well. So hopefully the topic we're covering today, implementation and a little demo of our software, will help you. If you're not already thinking about getting started, think about getting started. The theme here today will be getting started. So we'll talk about some implementation best practices, some financial statement reconciliation. We're not going to talk about policy elections too much today, but I want to point out at the bottom of this particular slide the dates that Joe just mentioned. Fiscal year, public companies have fiscal years starting after 12/15/18. If you take a look at public company financials, which are published, usually on their websites, you'll see that they have ROU assets and lease liabilities on their financial statements in a number of different ways. Some of them just call it leases. Some of them call them ROU assets. For everybody else that's not a public organization, we are implementing now fiscal years starting after 12/15/21. So with that, let's launch our first polling question. We're not gonna mess around today. We're getting right into it. When is the new lease accounting standard effective for non-public organizations? Now, fiscal years beginning after 12/15/22, or never? I'll give you all a second to do that. I know that's popping up on your screens and I don't think I see that here. So we'll give you all a second to do that little check-in. And then let's roll into implementation. One of the fun parts, maybe not fun for everybody, but fun parts about my background is that I've spent a lot of time implementing systems. Did a software conversion for an entire property management organization in 2015, which launched my career even farther into property management, where I took over properties on a very regular basis as the organization I was with was starting to grow. So I think I have a unique background to talk about all things implementation and have been living and breathing ASC 842 for the last almost 2 years. So hopefully the things coming on the next several slides will help you think about where to begin if you're not already thinking about that. It'll help you kind of think about not only where to begin, but where we need to go into the future. One thing that I think Joe already mentioned is that this is for all leases. There's not, there's only a few exclusions. We're not really going to talk about those today, but I think it's important to remember when we're thinking about our lease portfolio that we're thinking about everything in it. As we talk about implementation, I also think it's important to start talking about starting now. I don't know about you, but I don't want to think about what I was doing last February, next February, and we're getting really close to that. Busy season is going to be upon us very soon. So I want to, as we talk about implementation for 842 today, I want to talk about, let's start now. Let's not wait. So first order of business, let's think about decisions that we need to make. And one of the things that we're hearing often from our clients is that they are organizing a project team. They're going to be thinking about who in the organization needs to be involved. They're going to talk about and maybe get executive level sponsorship. We're going to think about which departments need to be involved. That might be legal, IT, procurement, treasury, real estate, finance and accounting, obviously, facilities, marketing. There might be leases in all those departments, so it might make sense to get everybody involved. We're going to discuss also who's responsible for certain things. I'll talk about embedded leases throughout our time here today. Remember that embedded leases are a lease within a contract. We have a great tool on our website available to everyone that's going to help you determine if your contracts contain an embedded lease. Perhaps that's something that not just the accounting team will need to be thinking about, and who's going to be responsible for those embedded leases. We're going to also want to make sure that we are thinking about who's responsible for reviewing leases. Not only leases that we have in place now or as of the beginning of our fiscal year, but we also want to be able to pull out leases that or be thinking about leases into the future. For example, if January 1/22 is my beginning of my fiscal year, then I'll need to implement the standard as of that date moving forward. Did I sign new leases this year? Have we reviewed them? Do we know what the impact to our balance sheet is? And how are we thinking about that into the future? We're also going to want to determine who's responsible for data entry. If we're choosing a lease accounting software, which we think is kind of the right move, we want to be thinking about who's going to take ownership of the data, who's going to make sure the data is correct, and the entry is good. And then also reporting. It's important to be thinking about what types of reports you might need. Do you have consolidations? Are there some things that you need to be thinking about as you begin using software? And what does that look like? And sometimes talking to other parts of your organization will help you determine what you need. That's going to be really important. So once we've determined kind of who's responsible, we want to think about not only journal entries, amortization schedules, and footnotes, but any customizations that you might need. We'll be thinking about that kind of on the front end. And then also who's going to determine new processes, who's going to agree on new processes, and then furthermore, who's going to review those in the future to make sure they're still sustainable. You know, as we think about changing the process for reviewing and implementing leases, we might need to adjust some other processes as it's related to how we're communicating with our accounting teams. Now that we've determined a project team, we'll start talking about determining who else should be on the team and who in the organization should be trained on ASC 842. Will only the accounting team need to know the details of the new standard, or will you want to include a high-level training for all staff or all management staff so they have some understanding of the changes? I think this is really important as we're thinking about the impact to our balance sheets for our leases. We might need to make sure that more than just the accounting team is familiar with the changes. Excuse me. Recently, I've also heard lots of conversation from clients that they're going to change who their lease signers are. You know, historically, when we had an operating lease, we just needed to expense that. So we didn't necessarily need to adjust who was signing those leases. But now, if there's going to be a large impact onto our balance sheet, maybe we need to communicate who's going to be appointed as those signers. So once you've decided on, excuse me, once you've decided on how and which staff need to be trained on ASC 842 and at what level, we're going to start communicating this and develop a staff communication plan. Like I said, we've adjusted lease signers in many organizations. In fact, I spoke to someone not long ago, the controller of a not very small organization. They had about 100 leases, and they made the rule that no matter what, either the controller, the CFO, or the CEO are the ones who are signing leases. Nobody else is going to sign them because they really wanted to make sure that they're reviewing their leases for the ROU asset impact before they proceeded with signing a lease. As we're thinking about using software to manage our lease portfolios, it's going to also be important to discuss with IT any requirements that they may have regarding software. For example, do you require only cloud-based solutions? Do you prohibit Excel add-ins? Does the organization have any SSO requirements? Is it important that only the accounting team have access to the solution, or will other users need access as well? And then also something that I don't think anybody with foreign currency forgets about, but I wanted to make sure we included it on the list, is if you have foreign currency translations, does software support that? And what type of reporting will you need? Something to just keep in mind as we're moving forward with our implementation. Next, let's talk about that, identifying that lease portfolio. As we have already mentioned, we want to make sure we're identifying every lease. This means searching divisions, expenses, looking at our GL to find out where we have things that might not be called leases and contracts that contain leases. Where will you look for those things? We are hearing with many of the firms and clients that we work with that haven't yet started about lease accounting that they're not quite sure where to start. So we're going to start with, what do we know for sure? We're going to find our leases. We're going to think about those leases that are in place as of our initial application date or the date we're adopting the standard, and determine also if those contracts had embedded leases. Like I said before, and I'll say this again probably multiple times today, I don't know about you, but I don't want to think about what I did 6 months ago, 6 months from now. I want to be thinking about this now. So if you haven't already gotten started with your implementation, now's the time. And that's a drum I'll be beating for quite a while. We want to also make sure that we were in compliance under ASC 840. I was on a webinar not long ago with a client of ours, and with a firm that we're working with, and they were really adamant you've got to be good under 840. And I think that's an important thing when we're talking about implementation. If our lease data that we had before was incorrect and we're moving that forward to 842, that's really not the goal here. The goal was to increase the transparency, so we want to make sure that the right stuff is being recorded as we're rolling forward through transition. We're also going to want to determine our policy elections. We've got a couple of items on our website and webinars that we do related to policy elections, so we're not going to go deep into that today, but there's quite a few judgment-based decisions that we need to make regarding how we're going to apply the standard to our lease portfolio. Things like discount rates, things like short-term leases, things like lease and non-lease components. And if those words are not familiar to you, I would challenge you that the education piece of implementation is where you want to begin. We're going to get familiar with the policy elections, and then we're going to start implementation. I also want to talk about abstracting. So this is a property management term that once I joined LeaseCrunch, I realized that not everybody understood. So an abstract is basically a summary of your lease. So back in my property management days, we had a rule, and that rule was that you abstracted once. So you knew what you needed, you pulled out all of the key data onto a summary. And that summary becomes really important because for lease accounting, we're going to pull out the key data that we need: terms, dates, options, lease payments, what qualifies as a lease payment. We're also going to be thinking about the control of that lease, and that's going to help us determine our classification. So really spending some time to determine you've got a good abstract for that lease will help you in the long run. Again, embedded leases is on our list here. We've already talked about embedded leases, but let me give you an example. I've said the word embedded a couple times, but sometimes maybe by way of example might help just understand what that means. My favorite example is something we're all familiar with. We've all been to a clinic, a hospital, urgent care. Lots of times the supplier contract for thermometer covers includes an embedded lease, and that lease could be the thermometer itself. So we work with a lot of medical facilities here at LeaseCrunch, and what we found and what they found, hospitals found, that those thermometer cover supplier type contracts sometimes include the right to use an asset, which is a thermometer. That thermometer met the definition of a lease, and it's something that needed to be recorded. Now, obviously, that could be a very low dollar amount asset and something that we're not going to really worry about, but materiality is something we'll talk about in a minute. And we want to think about those types of leases. What kind of supplier type contracts do you have that also give you the right to use an asset? That's kind of what we mean by an embedded lease. I also think it's important to think about your data gaps. If you have information that's missing. A good example of this is my accounting team is the one reviewing leases. And it's not clear from reading the lease what type of asset you have. Obviously, in a real estate lease, you probably know what that is. It's pretty clear. But there could be equipment type leases or other types of leases where the class of asset or what type of asset that is unclear. So we want to be thinking about those data gaps as we proceed with our implementation. Let's talk briefly about policy elections. I'm not going to dive deep into this topic today. However, I think it is important to spend just a few minutes talking about a couple of these. And first, we'll talk about discount rates. The amendment to the standard that was issued last fall in 2021 was very clear about non-public organizations using the rate implicit in the lease when readily determinable for an individual lease, regardless of our policy election for risk-free rates. So we have an option to selecting to use the risk-free rate, which is a lower rate, also easily identifiable. And we can determine to use that risk-free rate based on classes of assets. So on the last slide, when we talked about data gaps and asset classes, it's important to know what our classes of assets are. Prior to the amendment from last fall, lessees were required to make a decision entity-wide about our discount rates. So we were in all or nothing mode. And I think this is an important election because based on classes of assets allows us to make some decisions about what might be best for our lease portfolio and our balance sheet. If that's going to be really important and also streamlines our process. I do want to talk about also transition leases for a minute. Oftentimes here at LeaseCrunch, I also manage the support team. So questions that we get into our support center are things like, what rate should I use for my transition leases? And you can use either the rate from the beginning of the term of the lease or your transition date rate, transition date rate. That's a tongue twister. Um, Whatever you decide though should be made entity-wide. So it's one approach for all. So we're going to decide to use the rate for the beginning of the term of the leases or our beginning of the transition moving forward. I do want to also point out, and I can't remember if this is in a later slide or not, but our discount rate is not generally going to be the same rate for all of our leases. This is a common question that comes up. There is a policy election that allows us to use a portfolio type approach for our leases if they qualify to same classification, or I'm sorry, same asset type, similar term, etc. But lots of times our leases are not the same. We might have a 15-year office lease and a 5-year copier lease. And generally those discount rates are not going to be the same. So I want to think about that as well. I could talk about discount rates all day. Next, let's talk briefly about materiality. While it's not exactly a policy election, if you will, it is a judgment-based decision that we need to make. If you're at all familiar with the international standard, you'll note that the IFRS was very clear about materiality being $5,000 or less. So if the ROU asset lease liability was less than 5,000, it was immaterial. FASB specifically excluded a limit. So if you've read 191 pages of FASB and any of the guides from the Big Four, we know we were talking earlier about the KPMG guide is 1,200 pages. You'll note that materiality was explicitly excluded. Materiality is one of those things we may need to make a decision on. So when we're thinking about materiality, we're going to think about our day one impact. We're going to think about the value of the lease, not necessarily the payment. A monthly payment could be immaterial, but when we do the calculation to determine our lease liability, that could be a material amount. We also want to think about materiality as it relates to our debt covenants. Remember that we're adding our ROU assets and lease liabilities to our balance sheets, and our debt ratios and the way our lenders are calculating our covenants could be affected because we're adding an asset and the ROU asset is considered a long-term asset, and we're adding both short and long-term liabilities. So how we add those and what it looks like could really affect those debt covenants. I also want to state, don't make the mistake of dismissing certain classes of assets as immaterial. My favorite example of this topic is our ice machine example. We've worked with a few hotel chains over the years, and an ice machine, when we think about going to a hotel or staying in a hotel, we think about an ice machine on every floor or a few ice machines on every floor. And what they thought was immaterial actually turned out to be material assets. So don't dismiss classes of assets just because we think it's nothing. We do need to do a little legwork to make sure that we are accounting for those leases appropriately. Next is documentation. This should be no surprise. When we are implementing anything new, we want to make sure we're documenting our processes and documenting our changes. As far as ASC 842 and the new standards are concerned, there's quite a few items we're going to need to make decisions on. So it might be in our best interest to document those processes as, here at the beginning. The first thing we'll do, we've already talked about classes of assets a little bit, but we want to identify what those are. Those could be vehicles, office space, equipment, copiers, phone systems, server rooms, very non-exhaustive list of what your assets might be. If you're a LeaseCrunch user, we start with a handful of assets so that you kind of have a guide, but you can add and delete those as you see fit and in a way that works best for your organization. I've talked about embedded leases a couple times. We're going to want to make sure that we've reviewed our contract and documented if that contract does or doesn't contain an embedded lease. I think I mentioned earlier that we have an embedded lease identifier available on our website, and it helps you go through the questions that classify if that lease, if that contract contains a lease or not. So really handy tool, free for everyone. We're also going to document our policy elections. Here at LeaseCrunch, we have a policy election template that you can download right from our tool, and you will be able to make the decisions appropriate for your organization. If those decisions regarding the policy election is based on classes of assets or there's certain kind of commentary you'd like to add, it's a Word doc. You can make any changes you'd like and then upload it back into LeaseCrunch so that your policy is living in the same spot as your lease accounting. So very handy tool. As I mentioned, materiality, there's quite a few judgment-based decisions we need to make. And as we're making those judgment-based decisions, we'll probably want to document that as well. If I know anything about the auditors in the room, they're going to ask you about those particular elections. And then finally, we want to document our transition approach. This is part of our footnote that we're going to need to document. And we're going to be thinking about things like, did we restate prior periods or not? And maybe why? Maybe we want to document the rationale. Something important to just be thinking about. As we see users begin implementing the new standard, we often see them struggling with basic concepts, which is why first order of business on one of the earlier slides was education. So one of the things we want to do is be learning about the new standard. We want to be thinking about the key terms. Oftentimes, new users are asking about things like, what is an ROU asset, or what does ROU stand for? And it's right of use, by the way. And how do I determine my lease term? So by spending some time now learning a little bit more about the standard, what has changed, you'll probably be better off in the long run. And there's quite a few terms we're going to need to think about. I've already talked about embedded leases. I've already talked about ROU asset, a little bit about lease liability. What we haven't talked about is short and long-term leases, components. The list could go on. Believe me, I could stand here and talk to you about different terms and different things related to leases all day long if you let me. We're also going to remember that the definition of a lease has changed under ASC 842. It now includes things like control, identified assets, and substantive substitution rights of the lessor. So a little bit different than what we were used to under 840. And once we've defined a lease and understand our key terms, we need to understand our calculations of how finance and operating leases are brought onto the balance sheet and then subsequently measured. Those calculations have changed a little bit based on our lease classification and do need to be recorded correctly. Finally, we've got additional reporting requirements. There are something along the lines of 16 additional calculations on our footnote, and we need to include some things related to some commentary, if you will, about the footnote, about the decisions that we made. So it's not just all about the math, there's some other reporting requirements as well. I would say that it's important to also understand the impact to your financial statement. So let me give you a rule of thumb type example. This is an example we use when users are having a little bit of a struggle or just need a little understanding about what the impact could really be. A 10-year lease with a $10,000 monthly payment, which is very, very common in the real estate industry. And we'll say for the sake of example, we don't have discount rate on this one. That's really $1 million added to our balance sheet. So for many organizations, adding $1 million ROU asset and $1 million lease liability to their balance sheet could be a really big impact, especially when we're thinking about our debt covenants. Finally, get started now. Do not underestimate the time it's going to take. If you're anything like me, you always think you can get it done in 5 minutes and it really takes 10. So we want to think about the time it's going to take to implement, the time it's going to take to find our leases and identify the terms of those leases. And I would say make sure that we're thinking about it now. If I know anything about our private companies, budgets are probably wrapped up or pretty close to being wrapped up, and the next project on the list is lease accounting. Next, let's talk about systems. So no matter how your organization decides to keep track of leases, we do have a few ideas to streamline the process. The first, Let's start with new GL accounts for lease accounting. I think this will help you streamline your reconciliation of last year to the new, old standard to the new standard. Remember that we are recording our RU assets and long and short-term lease liabilities for finance and operating leases separate from each other and from other assets and liabilities. We'll also need to be thinking about the leases we've been recording throughout the year. So we have been doing it the old way. Our operating leases, we've been recording probably expenses all year. Now we need to adjust for that because we're going to add that RU asset and lease liability to our balance sheet. And then we're going to adjust those expenses for the year. So we want to think about how we're going to reconcile that. I heard recently about a client, another firm that we work with, a client of theirs, is just going to continue posting their expenses as they've always done, and they're going to true up the lease accounting entries on an annual basis. And I've been thinking a lot about that as we talk about best practices, both for our system and for kind of lease accounting in general. And I don't think that's a good approach. I think we should I think that the easier way to do this is to change your approach now versus reconciling an entire year every year. Next up, we're going to talk about variable expenses. Variable expenses are payments that maybe are something that changes throughout the year. So for example, if I have a rent amount that's maybe $5,000 at inception and then increases dependent on an index, that increase is a variable type expense. So how are we going to track those? How are we going to report on those? That's going to be something we need to think about as well. And as we're discussing systems, I think it's a great opportunity for us to talk about bulk imports into software. It's going to be important to know that bulk import is efficient. It's a great way of getting many leases into the system quickly. It's also something we need to know our exclusions about. So there might be things that are excluded from bulk imports. Important to know that in advance so you're not scrambling at the end. I will also personally tell you validation is important. And dating back to many years ago, when I was converting a database, an accounting database, we were going from Sage Real Estate to Yardi Voyager, which is two property management systems. And the consultant that we hired to help us with our Yardi conversion kept saying you have to validate. In fact, they gave us a project plan, and after every single import on the list, the word validate was part of the process. And it's really important because what you think is going into the system might not be it. You want to make sure that you're double checking to make sure how you thought it was going to import actually imported. I'll tell you this, when you messed it up a few times, you got really good at making sure it was right on the way in so you didn't have to fix it all. That's why we're going to validate, making sure that those lease payments went in as we expected, making sure the classification is what we expected. That double check is going to save you time in the long run as well. Lastly, let's talk customization. Is there information about the lease portfolio that's important that you need to keep track of that's not part of the system? There might be some customization available to you as well. Let's talk a little bit about transition leases, and then we'll talk about some initial measurement. I don't think we're going to talk about subsequent measurement, but then we'll talk a little bit about footnote. Then we'll get into a software demo. Transition leases. These are the leases we have in place as of the time we're adopting the new standard. So remember, our adoption date is going to be the beginning of the current fiscal year that began after 12/15/21 or prior period if we're going to restate prior periods. When we're talking about transition, we've got some opportunities available to us. The FASB has allowed for some transition relief. Commonly, the first one is commonly referred to as the package of three. It's an elected policy and allows the lessee not to reassess whether existing or expired contracts are or contain leases, not to reassess the lease classification for existing or expired leases, and not to reassess initial direct costs for any existing leases, whether those costs will qualify for classification under the new standard. These are adopted as a package for all classes of assets, so this is an all or nothing. It is a time saver. We're seeing that most organizations are opting into the package of three. And again, this is why learning about implementation practices is really important. We're definitely seeing organizations that don't realize that this is such a thing. So education is, one of the things I do here at LeaseCrunch, and I think we're going to continue this conversation. The next thing on our transition list is hindsight. This can be used with respect to lease renewals and purchase options when determining our lease term and assessing impairment of the ROU asset. This is also applied to the entire portfolio. However, most organizations elect not to make this election. It might be opening a can of worms where it maybe doesn't make sense to do so. And then finally, the discounts, transition relief. This is the opportunity to apply a single discount rate to a portfolio of leases with reasonably similar characteristics, such as lease term or asset class. I also don't think we're going to see many organizations opting into this, but that remains to be seen. For those transition leases, we're going to need to identify our lease term, reasonably certain to renew or terminate early. We're going to be thinking about our lease payments and existing balances. So existing balances is a topic that comes up a lot for us as well. First, let's define it. An existing balance is something on your balance sheet for those leases that you're transitioning from the old standard to the new. It might be something like capital lease asset and liability. It might be deferred rent. We're going to transition those existing balances from the old standard to the new standard. Our system handles that for you. So when we enter a transition lease into our software, it's going to just do the work for us because the concept of those old balances is no longer a concept under the new standard. Finally, let's talk about our initial measurement of those transition leases. I kind of already alluded to this, but we're going to assume here that this is the minimum amount of information we need to get started to record our initial journal entry. We're going to assume that we're opting into the package of 3 transition relief. We're using the risk-free rate, discount rate for this class of assets. So we'll need to know our start date for, excuse me, for transition leases. We're making adjustments as of that initial application date of the standard. And that the way to remember that is we've already accounted for our leases under the old standard, and now we're just going to account for them under the new standard. We're going to determine our remaining term and our end date of the lease. We're going to determine our discount rate, which we've already said was going to be our risk-free rate. Also, lease payments are determining our classification, and then again, any existing balances. All of those existing balances and everything here is going to flow through the ROU asset as part of the initial journal entry. And the system's going to do the work for you within LeaseCrunch. And that's our next poll. What initial application date will you select? Beginning of the current reporting period, the earliest period presented, or not sure yet?
And it looks like we've got about 6%, 65% of people have chosen beginning, 30% are not sure, and a few votes in for beginning of the earliest period presented.
Awesome. Good to know. I think that's exactly what I would expect at this point. Lots of not sure's. I think we're right on target. All right, let's talk about that initial recognition. This is kind of what this looks like in practice. So you can see here on the left, we have a finance lease. On the right, we have an operating lease. And here we're going to record the ROU asset for finance, the long-term liability for finance leases, and then we're going to move off or transition off the capital lease asset and liability. On the right, you'll see an operating lease. Same concept here. We're recording our ROU asset and our long-term lease liability and transitioning off that deferred rent because it's just not a concept anymore. Our subsequent recognition is going to look something like this. We're going to see that we're recording our amortization expense for finance leases, a reduction of our ROU asset, our interest expense as well. We're also going to see our long and short-term liability adjustment and a credit to cash, which is going to be our lease payment. In our system, we might also use a clearing account because we're not doing AP vouchers here. On the right, you'll see the operating leases. This is where we're going to show our expense, our reduction of our ROU asset, again, our long and short-term lease liability adjustment, and then that payment, which might be AP clearing or cash, kind of just depends. As we talk about implementation best practices, I think it's also important to talk about tying out systems. That reconciliation piece of this is going to be really important. As I've mentioned already a couple of times, make sure you plan for this. Make sure you're accounting for enough time to get this done. I would start now. I would I would start now. But I also managed 150 properties for lots of ownership groups. So if we were doing this in my old life, I would have probably already been done. It would have just been easier. But I understand that that's not always the case for everyone. So it's probably why we're here. We want to think about tying out our systems. We also want to think about making sure we have enough time to troubleshoot errors. There's going to be errors. We are human beings, living and breathing organisms doing this stuff. There's going to be errors. So account for that. Make sure you've got time to correct it. Make sure you have a good plan and deciding on your correction approach. And then obviously prepare for your audit. Documentation is going to be very important here, making sure that you're prepared for when your auditor comes around. And I would say don't wait. Don't wait for them to remind you in February that you need to have your lease accounting complete. Let's talk about that disclosure for just a minute. So 16 additional calculations on our footnote, on our quantitative footnote, the qualitative footnote, we're going to include things like the nature of leases, general descriptions, how the variable lease payments are determined, options to extend or terminate, residual value guarantees, restrictions or covenants imposed by those leases. We're also going to include information about leases that haven't yet commenced, but that could create significant rights and obligations to the lessee. We're also going to include in our transition year information about the judgments made and our transition approach, including short-term leases, which is another topic we didn't even talk about today. This slide is an example of what the disclosure will look like. In fact, I'm going to add a lease into our system in just a minute, and we're going to talk through this. But this is an example. Actually, this is pretty much identical to what you'd see in the standard if you've read 842. At the top, you're going to see lease expense information. In the middle, you'll see the other information. That's going to include some of the bigger items or the different items than what we're used to. ROU assets obtained in exchange for new lease liabilities, weighted average remaining lease terms, and weighted average discount rates, and then the maturity analysis all separated by finance and operating leases. And I don't know about you guys, but I quit calculating weighted average anything when I left college, just a few years ago. So next, let's just hop into LeaseCrunch. We'll do a quick demo. We'll show you how quick it is to add a lease into our system. So I've logged into our demo environment. I'm already here. This is what the system looks like when you first begin using it. Here at LeaseCrunch, we tried to make our system as streamlined as possible so that it's logical tool to use. We didn't want there to be tons of time implementing or getting the system set up, and we don't want it to take you forever to add a lease. So when I select add leases, we're going to walk you right through the workflow. So this is really all it takes to add a lease. I think when we're talking about transition and quickly entering leases, I think there's only 12 required fields, which again is a time saver. We're going to start with a reporting entity. Reporting entities are very commonly thought of like legal entities or business units. You could line up a reporting entity with your balance sheet. So if you think if you have only one balance sheet, you can think of reporting entity as I'll only have one. You might have more, depends on your organization for sure. LeaseCrunch also supports foreign currency translation. So if you have leases reported in different currencies, we can support that as well. And our next required field is going to be our lease name. We've got the opportunity to add things like description, manufacturer, square footage, location, and lessor. Those are all optional fields within our system, but can be used for additional tracking. So if that's something that's important to you, we certainly can add it. And then we'll have our asset type, which is our next required field. Like I said before, those asset classes are going to become important with how we're applying the standard to our lease portfolio. So we're going to line up the asset types here in LeaseCrunch to match those. And that brings us to our first wizard. We've got a couple of wizards here in LeaseCrunch that will help us walk through some decision making about our leases. The first one is our lease term wizard. This is where we're going to walk through early termination and renewal options. So here in LeaseCrunch, I'm going to say that we're entering a transition lease. We've talked a lot about implementation and transition leases today, so I think it makes sense to enter one of those in our system. We're going to say on this, excuse me, we're going to say on this particular lease that we have 30 months left. On step 2 of our wizard, we'll see that this is where our system kind of decision trees for you your early termination and renewal options. So we're going to ask you a few identifying questions, and based on how you answer these questions, LeaseCrunch will give you the correct next step. So are we reasonably certain to bypass an early termination option? Are we reasonably certain to exercise a renewal? Remember that reasonably certain, another topic we didn't cover today, is a high bar. So it's not just the like, yeah, I think so. It's economic incentive. What's our contract provisions? Do we need, is it really make sense for us to stay or not stay? If we do exercise a renewal, we'll add that new end date here. And when I select finish on the wizard, you're going to see that the system fills in the data for us. We're going to see that we've got our start date, end date, term, and ROE asset life pre-filled. The last couple of fields you'll see here, opportunity for comments, and then custom fields. We talked a little bit about customization today, and this is where you're going to see that information. When I click next, we're going to see that the system saves our progress and moves us right forward through the add leases workflow. Discount rate, we talked a lot about discount rate today. If I am talking about those risk-free rates and I click on my blue question mark here in the software, you'll see that we're going to take you to the topic you clicked on, and we're going to take you to some specific summary guidance and technical guidance about those rates. In fact, we even have those risk-free rates linked right here within our software. I haven't counted lately, but my programmers recently told me there's something along the lines of 78 question marks. So think about the help. 78 help topics available for you. And I don't even think that's the correct number, but lots of help available to you regarding the standard. So we'll enter our discount rate. Then you see incentives received and initial direct costs. Because I'm entering a transition lease, those fields are grayed out for me. I've already accounted for that under the old standard, so I'm not going to worry about it. Next, we'll enter our payment information. We'll select a frequency. We're going to select our payment amount, number of payments, payment start dates. We'll add as many line items as we might need and keep on typing in and entering our payment information. Clearly, typing is not on the agenda for me today. If you added too many line items, you'll click delete. You add as many as you might need. In fact, we've got plenty of leases in our system that have screens full of payments. Next up is the existing balances under previous lease guidance. So we talked about transition leases. We talked about the capital lease asset and liabilities. We talked about deferred rent. This is where we'll pull that data in so that everything flows to the ROU asset as part of our initial journal entry. The second wizard on our add leases workflow is going to be our classification wizard. And this classification wizard is going to walk us through classifying this lease as operating or finance. So under the new lease standard, there is additional criteria for classifying our lease, and depending on how we answer this information here will depend on the system will do the work to make sure we've got the correct calculation or correct classification rather. When I click finish on the wizard, we'll see that we've classified this lease as an operating lease. Step 3 is going to be GL accounts. So I didn't talk about administration here today, but our GL accounts are going to be pre-filled for us. We'll customize them under the administration menu, and then we're going to pull in only the GL accounts associated with the lease classification here. As mentioned in my bio, I was an accountant for 20 years. I love this part. I don't have to remember GL accounts at all. The system is going to fill it in for me. We've also got cost center allocations. So that's something that's helpful to you as well. You can allocate your expenses to certain cost centers. And as evidenced here, if you miss something, the system will remind you as you're walking through the workflow. Variable expenses and non-lease payments are next. If you have variable type expenses and tracking them in LeaseCrunch, we'll enter this information here. Similar to what we saw in step 2, we'll add our payment frequency, payment amount, number of payments, and start date. And then finally, we'll have the opportunity to attach documents. So a really handy tool in which we can choose our lease files. We can upload our lease file right here into LeaseCrunch, and then our policy elections, our lease accounting, and our lease files are all in one spot. I think that's a really handy tool. When I finish adding my lease, so that's it, we've added a lease in about maybe 4 minutes today. We are back to our My Leases screen, and this is where I can run reports. So let's take a look at some reports today. I think that it's important to note what our system offers. We've got our journal entry, our amortization schedule, and our footnote. For the sake of our example, today I'm going to run this for an entire year. Let's say, for example, you want to import this particular journal entry report into your accounting system. You can certainly do so by dragging and dropping our columns here. And then when I export my report from LeaseCrunch, Everything is going to export into Excel. Give that a second to open. Of course, on the wrong screen. Everything's going to open into Excel, and the formatting we just created for those columns is going to be the same here on the export as we had just listed in the software. You're then going to see your monthly entries. We'll see our finance leases first, followed by our operating leases. We're then also going to see our criteria, which is going to be how we ran the report, what was included, and the lease tab. A new update, a new feature we just added that I know some of the Freed Maxic team may not have seen yet is a link back to the software. So the lease ID will take you right back to this particular lease in LeaseCrunch. The leases tab also includes every single piece of data about the leases included on this report, including and not limited to that initial journal entry. So we'll always know what was included, as well as the lease term wizard answers and classification wizard answers. When we navigate back over to our software, we'll also be able to run that amortization schedule. And that's going to be a great tool that we can use to see the amortization for our group of leases. We can also run this report by with lease specific information. A great tool for reconciling. We talked a lot about reconciling during our implementation part of our call today. This is the screen that, or this is the report you'll use to reconcile. And again, we're going to always have the criteria and lease tab. And then finally that footnote. So we'll export our footnote. This is going to give you the footnote information calculations that you need right in the system. So this will be very similar to the screenshot we saw on the slide deck. We've got our lease expense information. We have the other information here, like I said, ROU assets obtained in exchange for new lease liabilities, our weighted average remaining lease term, our weighted average discount rates, and then finally our maturity analysis, all separated by finance and operating leases. So everything you need for the specific information. One more polling question, and then we've got some Q&A. I know we've got some preloaded questions that have already come in, and we'll talk through those. And we've got more time for Q&A as well. So how prepared are you to adopt ASC 842?
We've got about 50% of people somewhat prepared, split between not prepared at all and somewhere in between at about 20%, and then about 10% of people feeling pretty prepared.
Awesome, that's great. For those of you who are not feeling at all prepared or somewhere in between or somewhat prepared, you are not alone. This is a question that we started adding to our webinar decks in the last few months, and it seems like the whole country is in the same boat. So if it's any comfort to you, just know that you're not alone. So to learn more about LeaseCrunch, your Freed Maxic representative will have more details for you. And I do have some questions I want to go through as well. Some of these things we talked about today, some we didn't, but I think it's great that we've got some preloaded Q&A. One of those questions is, what counts as a lease under the new lease guidance? Well, we didn't talk specifically about the definition of a lease. It is going to be an identified asset, and we are going to have full control. It's going to be important to think about substantive substitution rights on that as well. Next question. How do I calculate cumulative effect and retained earnings using the modified retrospective approach? So a little bit of legwork outside of LeaseCrunch will help you do that. What we will give you is the entries that you would need for the recording of the ROU asset and lease liability, but you'll need to make your own entry to move those expenses into retained earnings. I would argue that using software to figure that stuff out is going to be a time saver. Of course, I am a LeaseCrunch staffer and I am paid to say that, but I do think it would be a great opportunity for you. Next question, and we talked a little bit about this yesterday as we were prepping. Do I need to adopt the lease standard if I have related party leases that consolidate? Yeah, you do. It's important to be thinking about that. Also important to think not just about those related party leases, which we didn't even talk about today. It's important to think about other leases that you have. We're not just talking about related party leases, we're talking about all leases. My favorite question is next. If a lease expires in 2022, is it considered a short-term lease for the purposes of implementation? Well, let's talk about that for a second. A lease is considered a short-term lease if it is less than 12 months and the lessee does not intend on renewing. So literally it's 12 months or less. If I have a 5-year lease and I have 6 months left into my implementation year, is that considered a short-term lease? That is not. The original lease term was longer than 12 months, and we are going to need to implement the last 6 months of that lease under the new standard or whatever, however many months are left as of your initial application date. Believe it or not, that's a very common question. We hear it a lot. Next, what types of disclosures are required in my year-end reporting? Hopefully our slides today about our the quantitative and qualitative footnote information is a good help to you on that. There are new disclosures required, and that's part of what makes doing this outside of a software very difficult. We built our software kind of with the footnote in mind and kind of built back from that. So, and like I said, if you take a look at the standard and see the footnote example in the standard, it looks just like ours. Another great question, excuse me, what effect will this have on my debt compliance? Not a gap exception. So what we're hearing from lenders is you have to get it done. We're not giving you any gap exceptions. Lenders don't like broken rules. And because we're adding a long-term asset and both a short and long-term lease liability to our balance sheet, the calculation of your ratios might be different. We are definitely hearing from organizations that they have been able to call their lender and say, can I have my debt covenants rewritten to exclude leases? And maybe you can. So that might be a conversation to have with your lender. I'd also argue you shouldn't wait. You should have those conversations now instead of waiting until later. Another exception, can I just use Excel? You certainly can. It probably won't be fun. You certainly can use Excel to think about leases and calculate leases, but I don't think it's going to be very much fun. I think it's going to take you time. I think when we talk about Excel, and I've got, I could talk about Excel and my career in accounting and using Excel forever, but I think that, yes, you can use Excel. Will it be problematic? Probably. My favorite quote from with thousands of clients, my favorite quote about Excel from a client of ours is, Excel is cumbersome and fragile. And I know that I'm speaking to accountants who have used Excel and have been in the boat of, we broke it. The version got messed up, or I didn't have the most recent version, or the formula got copied down incorrectly, many reasons. So yes, you can use Excel. We don't love it. We don't think Excel is a great tool for calculating your leases. It is a great tool to get your reports from and have them in a way that makes most sense for you. Questions in the chat that I missed while I was going on and on about lease accounting?
Yeah, so Jess, thank you very much for the overview. That's incredibly helpful. We do have 3 questions that showed up in the chat. The number one, and then that rose right to the top, is what about CAM for real estate leases? How do we account for that?
Yes, great question. So when we're talking about CAM, we'll be thinking about components of our lease. So there is a policy election where we can determine if we're going to combine components. CAM is usually considered a component of a lease, and if we're combining our lease components, we'll consider CAM as a lease payment, and it will calculate into our lease liability and our ROU asset. If we are choosing not to combine those components, then we'll determine standalone pricing for CAM, and that might be a little bit harder, and we'll be considering that as a non-lease payment and not accounting for that in our lease liability and our ROU asset. So lots kind of like a maybe. A short answer is maybe.
All right, the next I have is if we have a lease with required payments that are improvements and upkeep for the property over the lease term, does that go into the calculation of the ROU asset?
That's a great question. So improvements, as a general answer, the accounting for leasehold improvements has not much changed. It depends on who makes the payment, and I will defer to Deloitte has a really good guide about leasehold improvements that we refer to when we get these questions. So maybe.
Yep. As we've said, these handbooks are massive, and there's all these nuances into the standard. And then the last question that I have, and I think we'll conclude after that, is if you're implementing on January 1, 2022, do you utilize the risk-free rate from that date for the calculation?
Really good question. So earlier, I talked about the transition approach being one or the other. So you can use the rate as of your transition date or the rate as of the whole lease term, but you'll choose one approach for all of your leases and then apply that moving forward. So like Cherico said, we've got 1,200 page guides about this. I don't know. There's a lot of questions, but we're here to help. You know, we're all in this together. And I think if that helps anybody remember you're not alone in lease accounting, then I've done my job.
We have one late response in here. Is the residual value part of the lease liability and ROU asset?
Oh my gosh, Cherico, I don't know. You are going to use residual value when you're determining your lease classification, and that's part of our wizard.
I believe the answer is that it is part of
Payments,
the
I
ROU
think.
asset.
Lease payments.
I think when you
Yeah,
use
payments.
LeaseCrunch, it does ask for that somewhere, and it does go into the calculation.
Yep. And we'll look it up. But yeah, I think you're right. Lease payments, part of the lease payments. So yes, part of the calculation.
All right.
Good questions. Happy to stick around if anybody has more questions. Happy to answer anything else.
I've had a couple more questions in the social Q&A. I can't recall if they were answered or not.
Yep.
If we're a nonprofit implementing 1/1/22, do we use the risk-free rate for that date for our discount rate calculation?
Yep, we've got that one
We
covered.
did that? Okay,
Yep.
thank you. Got
No
it.
problem, Jen. But thank you for checking.
Yep.
All right. Well, thank you everybody for your time today. We really do appreciate you taking the time out to learn about the lease standard. We know it's cumbersome. You know, Freed Maxic, LeaseCrunch, we are here to help. So please, if it is something that you are working on implementing, please reach out to your Freed Maxic representative as soon as possible. We have had a lot of traction with our current clients, but if you do need assistance, please consider reaching out sooner rather than later. All right. Well, thank you, everyone. We appreciate it.
Thanks, everybody. Please take a moment just to check out in Conferences.io, the same place that you checked in. Have a great day.